Hi, I'm Elisabeth Dawson, and you're listening to our show, Ways to Love Your Money. I'm actually going back to the book today, and the book that I wrote is Wealth by Design, and we're going to talk a little bit about chapter 3, not 13. Anyway, it's basically the concept of trying to identify dollars that are leaving your life and you don't have any chance of recovery. So what's the educational process here? This educational process is to look at every dollar that you're spending, whether it's on your mortgage, whether it's on credit cards, whether it's on your homeowner's insurance, your life insurance, whatever it might be, and look at those dollars to see how we can actually recover them for wealth for you so that you can actually get them back from financial institutions. We've talked about this quite a few times on the show, but it's really our passion and mission, and that's really why I wrote the book, Wealth by Design, because of the idea is that we need simplicity when it comes to managing our finances better. Most people that I talk to, maybe if it was the very first time that they've ever talked to a financial advisor or an investment advisor to look at all their different perspectives, they just didn't necessarily know where to start. So the first start and the first step might be to get an educational book because, again, when was the last time you actually read anything of education when it came to finances? You didn't get this in grammar school or high school. You maybe had a little business class along the way. But if you didn't go to college for business and finance, it's going to be a lot harder for the average consumer to figure out what happens and what works. So why I want to talk about this subject a little bit is because we're going to have a guest later on the show today that's going to talk a little bit about credit cards and such. But the conversation I want to have with you about credit cards is that in most cases, people will charge a vacation, they'll charge a table, they'll charge a jacuzzi, whatever it might be. But they might even use that credit card for daily living expenses, like for a restaurant, for gas, for multiple things that they just want to have on a systematic basis. Well, there's pros and cons to all of that, right? But it's really having a purpose, having a financial purpose and saving money, so that you can have those pieces handled, whether it's vacation or whether it's a home improvement or whether it's for college educational expenses for your child that's maybe 17 years of age. It's time to start saving now, but to have a mindful purpose. So let's go back to credit cards again. So I don't mean to flip around here, but if you go back to chapter 3, you're going to see some things that I talk about how to find money. I was having an interesting conversation with a friend over the weekend, and she goes, "Gosh, I was spending $400 a month on Starbucks." She goes, "I had to curb my thing." She's a business owner, and her daughter would go and spend about $30 to $50 a day at Starbucks. And I go, "Wow, they love you. They love you." But she goes, "Well, I have to cut back." I mean, obviously, we know Starbucks doesn't want her to cut back, but she's got $300 now that she trimmed it down to that she could save. She goes, "Well, I'm saving at least $300 now per month." And I go, "Well, back to the same question that I ask people all the time. Well, where are you saving that money?" And she goes, "Well, what do you mean?" And I introduced also another chapter in the book called the Wealth Recovery Account. And the Wealth Recovery Account, which is a very powerful piece that we need to talk about, it's every dollar that's unnecessarily going to certain expenses. It could be lifestyle expenses, which I would say the Starbucks habit is probably a lifestyle expense. Not that I don't go there myself. I'm just saying it's about curbing certain expenses so that you're not overspending. And, ask yourselves the question, what's really my coffee, shop habit? What's my, music habit? What's my, what am I doing with my mortgage? Am I overpaying it significantly? Am I putting thousands of extra dollars in it per month or per year? What can I do to recover some of this wealth? Because again, the government's in your pocket before you can even speak, usually with most people out there when they get their paycheck. The second thing is we do business with financial institutions. Financial institutions meaning, credit card companies, merchants, things like this. And then we do business with banks, and banks charge us fees, and sometimes we just take it. So what's the other part that's missing? Well, it's the lifestyle part. Every dollar is pretty much almost accounted for most people today, and that's why the annual savings rate for most people in the United States is less than $1,000. Ask yourselves that question: do you have a savings account with more than $1,000 in it? If you do, I commend you, because the average consumer does not. So what do? We want to try to recover some of these dollars, especially from, let's say, a credit card expense. It could be fees, interest, annual charge for having the card. You need to quantify that and kind of say, okay, well, what are those costs? What are those expenses? It could be $300, or it could be $400, it could be $500. We just recently looked at a client situation, and we went over their cash flow, and we saw that their fees on their credit cards were over $188 a month. Well, that's a powerful amount of money that just keeps on going on. And then when their credit card minimum payment is like, $75 and their interest of 188 is not anywhere going to get them in a position to ever pay off their credit. When do we have to start changing our relationship with money? And that's really what the show is all about. Ways to Love Your Money is about a relationship with money. It's about a respect for money. And, all these financial institutions, banks, government, and lifestyle, all those companies love you for what you love to do, what your behaviors are economically and financially. And they want to keep that money from you, and they don't want you to pay off credit cards. Again, same client I'm talking about that I worked with last week. We had a strategy to pay off all their credit cards. They had no idea they could do this. They had been having cards for about 30, 35 years, and they had no way to know how to get out of it. Well, we came up with a strategy, and it was really a simplistic strategy, and how to pay off those pieces because they did have some assets that could actually be leveraged to do that. And it was very interesting because when we were calling these credit card companies to get the true payoff, and just let you know, this is a different number than what you see on your credit card statement that you just got, because credit cards are charging you on an annual basis, but it goes by month, and then it goes by day, and then it goes by second. And if you don't pay off your full balance in full, then you're going to have these additional interest charges every single day, unless you're at a 0% interest rate, which is what everybody wants. So saying this, they were in a situation where we were calling together about a week ago, and we were calling all these companies to get the true payoff. It's different than the number that they have, even what they see online. So it could have been $2,600 that they saw online, but the payoff was over $2,700. So what you want to do is you want to get out of the rat race, or the rat wheel, if you will, of getting off of those credit card balances that you cannot afford to pay off. Because if you have goals, dreams, and desires to buy a piece of property, or have your first home, or buy a investment property, or you want to save for your children's college education, or hey, what another novel idea? What about for retirement? You need to start seeing how the cost of doing business is really affecting your bottom line. So it's not that credit cards are the root of all evil, it's just how we decide to use them. It's not that, Starbucks is the root of all evil. We all love it. It's just about how do we budget that. It's not about paying off your mortgages as fast as you can, because if you haven't met with your, tax professional, you may be hurting yourself in taxes versus just thinking that you're saving interest alone. There's so many different things to talk about financially that you need to start getting used to the conversation and start talking to people, or the right professionals, about it. Sometimes people are just very transactional. They go, I'm going to buy this house, I'm going to have this mortgage. I have to have two different people in that relationship to be able to make that happen. That's great, but if you don't look good on paper and you don't have enough cash savings, how well are you going to look to an underwriter of a bank to give you that loan in the first place? So that's just one little tidbit of information that I'd love to share with you all. If this is speaking to any one of you out there right now, which I hope it is, I hope you'll take some notes. I hope you'll re-listen to the show. But again, continue to subscribe, and then reach out with some questions about your personal situation. I want to know how you feel affected. I want to know how you feel that you're being addressed with all the questions that you have. If you're not working with a financial advisor and you're trying to make the biggest purchases of your life, which is your first home, or your second home, or your third home, and doing the right amount of mortgage for that, you've got to look good on paper. You've got to look great to a lender and underwriter to be able to approve your loan, and you've got to want to have more liquidity so that in the event that your personal economics goes in a different way one day, you want to make sure you can course correct and say, I've got liquidity for that emergent event. Whether it's $1,000, just so if the tires blow out, you have that. Whether it's, you have a flood, you've got your deductible. Whether if it's something like I just experienced myself this last week, I have a rental property that's not in the state of California, it's a different state, and apparently the homeowner's insurance doesn't cover a pipe main break leak. And they have to go completely under the house, go into the construction of the house, and go into the concrete, and that all has to be redone. So that's on my dime, not the deductibles dime, and not the insurance. So make sure that all these resources that you're trying to have in your life, they all are coordinated, that you have a great advisor that can help explain to you everything that you're doing, because I guarantee you this, you're going to navigate through things, think you're doing things one thing at a time, but it doesn't necessarily work that way. You have to have great coordination and integration of all of your financial matters. So Again, thanks so much for listening. I hope that you're getting some great knowledge and education as we go through this. And I hope you have questions. Email me your questions. I want to hear all about them. Questions with an S at elisabethwithansdawson.com. And, ask us those questions so we can bring them on the show. We'd love to have your perspective. Thanks so much for tuning in. Hi, I'm Elisabeth Dawson, and you're listening to our show, Ways to Love Your Money. I have a wonderful guest who's also been a client of mine for years, and I just love him. But he has a different perspective when it's talking about actually credit cards and what to use when traveling and what not to use, and how to protect yourselves from any kind of identity theft and things of that nature, but also just a consumer perspective as well. So without any more time waiting to introduce our guest, this is Mr. Nick Toledo, and I'm so happy that you're here with us today.
Thank you for having me.
You're welcome.
It was an exciting adventure here, something new I haven't done before.
Yes,
yes. So I am a vice president, corporate relationship manager for a international bank.
Okay.
And we are the largest direct acquirer of credit card transactions here in the United States.
Wow.
Okay.
The largest.
The largest.
Wow.
Bank-owned acquirer. So what does an acquirer mean, right?
Sure.
So because your show is kind of aimed toward consumers. I want to talk about consumer credit card use and kind of how our industry works. So just to kind of start off, I primarily work with CFOs, controllers, accounting managers, and they also work with technology teams with merchants. Okay, so my clients that I work with are larger clients on a scale that may have 200, 275 locations.
Okay.
They may be an online retailer.
Okay.
That sell wireless services or Wi-Fi services to consumers.
Okay.
So I manage a relationship between the bank that I work for and their credit card processing.
Okay.
All right. But I've been in the industry 15, 16 years, and then I also work in conjunction with their consumers. So and the kind of cards that they take, right? So I have a lot of knowledge when it comes to not only the internal workings of merchant credit card processing, but also the internal workings of consumer use. And what's happening out there, there's a lot of questions a lot of consumers would have about using credit cards. What's the right card to use? Why do I have a chip? And sometimes a merchant doesn't have me dip, they have me swipe. And what is dip anyway? So I kind of want to start there.
Okay, I think that's great.
And then, so sometimes consumers will say, well, why have I not gotten a chip card yet? So the chip industry, which we call in our industry EMV, which stands for Euro, MasterCard, Visa, because that technology and secure technology started in Europe. And so it's called EMV. So you'll notice that if you've traveled to Europe, what happens is that you usually have to dip your card. In most cases, they ask for it. And what I love when you travel to outside the country is that when you're at a restaurant, they bring you the credit card terminal.
Right.
So you actually have to dip, that's what's called the industry, dip the card instead of swipe. So that technology has been migrating over to the United States.
And I've heard that came from Europe, but what is the purpose of that chip? And why is it more protected for the consumer when they're using that for a transaction?
Than the magnetic strip, right? It's because the chips are embedded and they're unique to the card and they're unique to the issuer. They can't be copied. Magnetic strips can actually be copied. And so there are fraudsters out there who actually will manufacture fake cards with a magnetic strip that will work through a credit card terminal. And that's where a lot of fraud happens in a retail environment, swiping.
Well, we've even had people that we've known over the years that someone came by their purse or their wallet and then they just had some type of scanner that they could actually scan those types of, just the swiping type of card. And get their credit card information.
Correct.
And they get a phone call from their bank and they say, oh, well, I didn't lose my cards, I still have them in my wallet. So it's interesting how that's all evolving and changing, but I'm glad that there's more protection and security on the horizon.
There is, and a lot of that happens, so sometimes a client will, or a consumer will ask, well, why does this merchant that I go to have me swipe? The merchant who processes the acquirer or the credit card processor who works with that merchant may not have up-to-date terminals yet. So that's why. So they're still asking, to have you swipe the card. So the card will work whether it's dipped or whether it's swiped.
So there's still some element of exposure even with the swipe? Is that
Not
possible?
no,
Not necessarily.
no,
Okay.
not necessarily.
Okay.
But the industry is really as a whole trying to move to chip card
Okay.
altogether. So you have to remember that as a consumer, just know that if your merchant isn't taking chip cards yet,
Yes.
they will.
Okay.
Because the makers of the credit card terminals have to manufacture
Okay.
those. And then remember, the issuer of your card has to issue chip cards. So if you bank with a smaller credit union or
Sure.
a smaller bank that issues their own debit cards or credit cards, they may not be issuing chip cards yet. So that's why. Pretty much though, it's gained a lot of traction.
Well, it's so
recent
funny
years.
because I'm just thinking about this because 30, 35 years ago when I was working in retail, even as a teenager, they didn't have a swipe or anything. You had to kind of do that manual,
Yeah, I know what we call that.
or do it with a pen to get the
Yes.
imprint on the paper.
We call that a knuckle buster.
A knuckle buster. Yes, they were
Right?
a knuckle buster for
Yeah.
sure. I remember.
And so in the industry, we really refrain merchants from doing that.
Okay.
Because in the industry, we have what's called PCI compliance.
Okay.
Payment card industry compliance.
Okay.
So a merchant cannot hold card data.
Okay.
Cardholder data within their industry, or within their business. So what that means is that if you're using an online, if you're using your card online,
Sure.
or if you're swiping it at a merchant location,
Sure.
they cannot hold cardholder data. And they have to do a compliance review every year.
Okay.
And online retailers have to do a compliance review every quarter to make sure that their website is not accessible
Okay.
by fraudulent behavior.
Well, cybersecurity is on the rise.
Yes, finally.
And that's
it's
a
good.
big thing. Yes, it is a good thing. It's a good thing for you. It's a good thing for me and everybody else out there.
Yeah. And we as the acquirer, just so that you know, we as the acquirer, we manage that.
Okay.
So just know that the acquirers they manage that on the merchant.
Okay.
So we hold them responsible
Okay.
for being compliant.
Okay, good.
Yeah.
Well, I know you mentioned too about what card or what to use when you are traveling, whether it's in the United States or whether it's in Europe.
Yeah.
What do we were talking a little bit about some options that you said that needs to be a little bit more knowledgeable and educational out there.
It is. And you taught me a lot as well going through our financial well-being is limit the number of cards that you use. So let's just kind of start from the beginning.
Okay.
Getting ready for vacation,
Okay.
right? So a lot of times people remember old school would actually save money to
Yes,
go on vacation.
which they still should. But.
Yes, as opposed to, I'm just going to use my line of credit.
Right.
I've got $2,000 on this card.
Yeah.
I've got $3,000 on this card, and I'm just going to go to Italy.
Right,
Right.
right.
So I think one kind of piece of advice I have that I personally use from you is let's go back to that old school way of saying, I'm going to save up money to go on vacation, and now I'm going to use one card. I'm going to use a credit card, not my debit card when I travel internationally.
Okay. And why do you say that?
Because if you are a victim of fraud, international travel, you have now provided access to liquid cash
Okay.
to the fraudster, as opposed to a line of credit.
Okay.
So a line of credit can be shut down. You can file a chargeback or a dispute.
Sure.
You can have a new card number reissued much quicker than, oh my gosh, I'm out the liquid cash I had in my bank
Right.
account.
Right.
So I always recommend, when we talk with friends, make sure to get a credit card that you're going to use one card. If you need to use two, keep it so that you can manage your spending. Also, use a credit card that has no international fees to it or conversion
Yes.
fees. There's a lot of cards out there that don't charge conversion fees.
That's great.
And
Yeah.
so
that has happened to me several times and I have to say I'm guilty a little bit of something because I've used my debit card internationally. I won't now.
No, don't do that.
But for the most part, I don't really like credit cards in general. And we've had that conversation, but there are certain things that you have to have when you do travel international or on vacation.
Yeah.
And you want to secure things, whether it's your flights, whether it's your hotel, certain things that don't necessarily open up problems for some type of a hacker to get into your account.
And if you don't qualify for a credit card, there are prepaid credit cards out there.
Yes.
Okay, so you can do a prepaid card, in which is basically a savings account
Sure.
that you can, put in $1,000. You can contribute to it monthly,
Yeah.
which increases your credit line.
Right.
Or you can get a prepaid debit card.
Well, and sometimes that's actually, those prepaid type of debit or credit cards, that's actually help people even reestablish credit again if they've been through, a life event that maybe their credit got hurt.
Yeah, absolutely.
So I know that that's been a tool that can be used for that too. And we hope that they're all resources, right?
Yeah.
We hope they're all good resources.
But I think I can't stress that enough. In traveling internationally since I've met you,
Yeah.
is doing that saving
Yeah.
and then utilizing one card that doesn't have conversion fees, and then I
Right.
can manage my spending and I can actually pay that off
Yes.
because that liquid cash is sitting there in my savings
Yes.
account planned for a vacation.
Isn't that great?
Yeah.
Well, I think it's planning with a purpose, right?
Right.
Having money for an emergency, having money for, for life, having money for vacation, because so many people out there, as you know, are, they charge their vacations on a credit card. And they don't necessarily have the cash flow or the budget or any kind of, value to be able to put towards that. They just are going to pay it off over time.
Yeah.
That's the shame I always see when it comes to people that they'll make a big purchase like that and it'll take them, 5, 10, 15 years to pay it off, or maybe they never pay it off. I mean, it's kind of designed that way, by paying a minimum payment versus, paying off a balance. So the way you're doing it, you're having your balance already saved. And then when you're back from vacation, which, we love to do, then you can just say, oh, it's done.
Correct.
Oh, it's done. And then it's actually planning with a purpose and not
Yeah.
something that's going to get out of control.
Right.
It's not going to get out of control.
So the other thing I wanted to talk to you about
Yeah.
was chargebacks and disputes.
Okay.
Okay, so in the credit card industry, consumers have the right to dispute
Okay.
or charge back a credit card
Okay.
purchase
Okay.
within 180 days of the date of purchase.
Okay.
Okay. They file that chargeback or dispute with the issuing bank of that card.
Okay.
Okay. So I kind of want to walk you through what happens on the
Yes.
merchant side.
Yes.
If I have a client who's my client, who's the merchant,
Sure.
and they sell a T-shirt online, and the cardholder they get the purchase, and maybe the screen prints off a little bit, and they say, you know what, I'm just going to dispute the charge
Oh,
with my credit card company,
can they do that?
but I'm still going to wear the T-shirt,
Oh, yeah.
right?
That sounds interesting.
So what happens with that, just so I think that consumers should know,
Sure.
is that the merchant is not only out the property or the merchandise, but they're also out the money.
Right.
And you still have the merchandise.
Sure.
I just always like to advise to friends and clients and say, you know what, before you ever file a dispute or a chargeback,
Yeah.
call your issuing card and ask them to do what's called a retrieval.
Okay.
And this goes into if you don't recognize the name on your credit card statement.
Okay.
I don't recognize this name. I'm going to file a chargeback right away or a dispute.
Call them first.
Call your issuing bank and
Okay.
ask them to do a retrieval.
Okay.
And what a retrieval does is that your issuing bank will give you the information of who that merchant is or you spent your money.
Okay.
Because what we set up on the acquirer side is we set up what's called the descriptor. So
Okay.
that's the little descriptor that you get on your statement.
Okay.
And we recommend to merchants, make sure it's clear enough so that your cardholder understands where they're making the purchase.
Okay.
But I always recommend to people, consumers, friends, clients, say, please don't just file a chargeback.
Yeah.
It's really tough on the merchant. Call your issuing bank, call the 800 number that's on the statement.
Okay.
And ask them, who are you again? I forgot. There's something in our industry called friendly fraud.
Okay.
And friendly fraud is basically when a cardholder doesn't recognize the name of the merchant. They forgot about the purchase. They maybe forgot that they purchased something and sent flowers to someone.
Okay.
And right away they'll file a dispute
Okay.
as a fraud. Well, unfortunately, merchants can't fight those.
Really?
And so they're lost altogether.
Wow. Well,
So-
as a business owner myself, I understand that.
Yeah.
We don't do as many transactions through credit card or things of that nature, but yes, you always want to honor your consumer, your client, in any business, like you just mentioned, the T-shirt business or
Yeah.
things of that nature. Yes, it takes a lot of money to make these things. When people are in production of something that has capital behind it, and they want to be able to get the value of what they gave out, right?
Right.
So how do we basically make people a little bit more honest about that? It's a powerful subject. So I've never heard of a retrieval. I've never heard of all these different pieces that you say are already kind of embedded into the banking situation to But yes, we need to be more prudent and more mindful of, there's always going to be something that you don't recognize, but do the research first. That's what I'm hearing you say.
Call your issuing bank.
Yes.
Or call the 800 number on your statement.
Okay.
I think the other thing I want to talk to you about too is reoccurring billers.
Okay.
And how do I know when to use my debit card or bank account as opposed to when do I use my credit card on reoccurring billing?
Yes.
Such as music, trying to think of the right word, music streaming.
Okay.
Right?
Or even like a gym membership or something.
Gym membership.
Okay.
Compared to car insurance.
Okay.
Right?
Okay.
So what we find in our industry as a whole is clients who tend to process insurance payments or utility payments.
Okay.
The consumer will most likely use what we call electronic check processing or ECP.
Right.
So you're more willing as a consumer to probably give out your routing and account number for your monthly billing of your electric bill or your water bill.
Sure.
And a lot of utility companies will take what's called ECP, electronic check processing, and that's a lower cost of processing than it is a debit or a credit card.
I see.
And that's usually a much safer environment, and as far as like having access to liquid cash, because the consumer is initializing or initiating, the payment. You're initiating that payment out of your checking account.
Right.
But when it comes to like music streaming services or child education tools, things like that, you may want to go credit card instead.
Okay.
But you're going to pay off that credit card.
Yes.
If it's a lower amount, music streaming services $9.95 a month, debit card's okay too.
Yeah.
But you don't want to use a debit card at a clothing site that you saw on Facebook that had a cool T-shirt that you've never seen before.
Okay.
Why would you give them your debit card number?
Yeah.
If you want that purchase.
Way too much personal access.
Absolutely.
Way
Use a
too much
credit card
liquid
number
access.
instead. Yep.
Very good information. Thank you so much for being a guest on our show. I mean, this
You're
is
welcome.
powerful knowledge, and I think just from the in-depth, structure of how the companies actually work versus what an average consumer thinks that they can do with their money. There's a lot of smart and a lot of education that people can get when it's actually using the credit card for the right reason versus the debit and for protection and things like this. So I'm grateful for you sharing that information and knowledge.
Thank you for inviting me.
You're welcome. You're welcome. Thanks so much. Hey, this is Elizabeth. I'm here. I want to find out what you think about some of the people on the show today. I think it's a great opportunity for you if you would like to be introduced to them, as well as even be a guest on our show too. So give a call at 619-640-2622. Let them know that you were listening to the show and that there was a guest that you really would like to be introduced to. Or again, give us some feedback. We'd love to know what you have to say about the show. You can even email us at questions@elisabeth.dawson.com. We'd love to hear what you have to say. We want to know who you want to hear and who you want to see and who you want to meet. So again, stay in touch with us. Give us feedback. We love it. I would just love to thank Nick Toledo for being here today. It's been just such a pleasure to hear his information. Everyone here in the studio was peeled to his knowledge and education when it came to, the client processing of credit cards and debit cards out there. And it's really about, identity protection and what's the best way to protect your assets, protect your liquid assets. I even was educated through this conversation that I was doing a couple things that I shouldn't be doing. So if any of that information that you just heard from Nick is of a nature that you want to talk about or you have a question about, please reach out to us. We will definitely put you in touch with Nick, and I'm sure that he would be more than happy to answer your questions because this is something that I think most consumers just don't even know about. What's a dip? A dip when I was growing up was something not nice. You were calling someone something of a name, but with this information, our identity protection, our the fraudulency that's happening out there, and we were even talking here in the studio that it would be really incredible to hear someone's perspective that even went through a fraudulent event in their lives when it came to their credit or their cash flow, or their accounts, or their debits, or whatever it might be. I know how sensitive that subject is, so that's why we want to talk about it. Being more aware, being more in tune with how your protection of your personal assets that become something we call cyber, when you use it online, when you use your debit card or your credit card or your, your social security for that matter. How do you protect your identity so that someone doesn't come after you? So think about all this. I'm hoping that you got a lot of great education from our conversation with Nick. It's been a pleasure to have him here, and so glad that you tuned into today's show. The information provided in this show is for informational and educational purposes only. This show is not investment advice, nor is it intended to address the financial needs of any particular viewer. The opinions expressed on this show are not intended to be an endorsement of any particular investment strategy or service of any other kind. You must make an independent decision regarding investments or strategies mentioned throughout the show. Before acting on information in this show, you should consider whether it is suitable for your particular situation and strongly consider seeking advice from a financial advisor.